for the benefit
Okay,
of everybody here.
sure. Thanks, Kome. Hello, everyone. Like Kome mentioned, my name is Ejemen Roluga. I'm a business and finance professional, ex-investment banker who, um, I was in investment banking, a little bit of a background. I was in investment banking for about 6 years. And at the time I thought to leave, it felt like I was on autopilot, right? So investment banking can be can be really intense. I think that's the best word. Um, I mean, closing as late as, or as, yes, as late as 3 a.m. in the morning. Um, in between, I was raising a family, so it was really intense. But I didn't know that I just kept moving. And after about 5.5 years, I when somehow you take a pause and you are like, I mean, what has happened in the last 5.5 years? It's time to try something else. And then I left and went got into the industry to I started off consulting independently for companies, um, either as an independent consultant or employee. And yeah, here we are. In between, so in the last 10 to 12, 10 to 11, 10 or 11 years, I have raised different types of funding from local development finance institutions, like DFIs, to VCs, to VCs, to public funding, like the what's this called? Capital raising from the public, a corporate bond, etc. Raise money from investors on very small scales to large scales, and large scales, and the large scale I mean as high as 5 million USD, and as small as 5 million naira to, so which is like 30,000 USD. So between 30,000 USD to up to 5 million. And yeah, so that's been what I've been doing. About 3 years ago, I noticed that a lot of people or a lot of companies want to raise money, but they miss, somehow they miss the chat. So either they are raising money too soon, or at the time when they're raising money, they've tested and they know that they're financially viable. Um, but there's just no cohesion. So you're talking to an investor, the investor can spot gaps um, in your process or in your business. It's a sum of the parts. And I thought to start up a platform or a company called AR on Demand, which is basically helping you find your spot, because that's the biggest thing. If you've not found your spot, you cannot be financially viable or commercially viable. And that's what I've been doing, helping you find your spot and creating products and tools to help you either launch or relaunch a viable business. Yeah, I believe that's it. That's what I've been up to.
Okay.
Um,
All right. I want to ask you about your educational background. So
okay.
what's your background? What puts you in the right position to be teaching us today about, and this is obviously, this answer is not for me, but why are you the right person to be teaching us about preparing for raising capital, apart from just the fact that you have experience? What's your technical knowledge?
Technical knowledge or technical,
Education.
okay.
And technicality wise, it's not just experience. So some people will come and say, oh, I worked in investment banking, but we want to know that you are the right person to be advising us. So
I see.
mhm.
I see. So I would say it's a mix of two things. So first of all, I have a background in finance, and then along the way, um, taken like short courses from Euro Money. Currently, taking like my my professional course or qualification with the ACCA. But I would even say more than that, raising money. Um, when I look at the most successful capital raising um, around me, it's more capital raising is very, very practical. So yes, there's an art to it, but I would say bigger than that, um, it is very much on the job, right? So the fact that I have, single-handedly raised money from, like I explained earlier on, I've raised as little as $30,000 for startups, to as high as $5 million from VCs, Bank of Industry, done a corporate bond, the full stretch. I mean, it doesn't get better than that. I have been on capital raising transactions, and I've seen I would even say more interesting, more specifically, that for me, the biggest learnings have not even been the successful raise, or the successful capital raising. It's actually been the failed ones. I was on I don't know if you guys remember, some 7, 8 years ago, the merger between Rand Merchant Bank and Sterling, and how that deal fell through. I literally was on that transaction. So I have been on very exciting transactions over the last 10 years. And I've seen how, just a little bit of emotional intelligence, negotiation, what's this called? Which for me is the biggest one, your financial structure, how those very simple things can basically kill a deal. They're deal breakers. And that for me is the biggest thing, not even um, your, um, so for me with capital raising, your experience is more tangible than any professional qualification. And that is my own personal experience. And that's what I've had.
Okay. I want to ask you something, right? So when, first of all, we started talking about raising capital, and I used to think that it was big companies, like mega companies like the SpaceX and the Flutter Waves, that raise capital. I didn't realize that small companies or small businesses could raise capital as well. So can you enlighten us on what are the kind of companies that can raise capital? And is there anybody or is there any business that is automatically disqualified from raising capital if they wanted to?
Nope. So that's a really interesting question. I would say, in terms of the companies that can raise money, any kind of business. But personally, if you are a company that has just launched and you have not found your spot, or you are not, and I see a lot of startups make that mistake. So you have a very lofty idea, you think that this is the next, this is, like I was talking to a founder 2 days ago, and he said, "Oh, I'm actually working on a product that will get me to retirement." That is a very ambiguous statement, in my opinion, right? So working, you trying to, launch a product, or you have an idea that you think would change the face of the world. Those things are exciting. They're great. They always give entrepreneurs the rush. But if you've not launched, you've not done a pilot, you've not launched, I think you have no business raising money. Okay. Personally. Yeah. So any company, as long as you have done your pilot, and by pilot I mean you have tested the market. The market, the results from your pilot shows you that the market is ready for your product, and has even given you feedback to tweak your model. You're ready. You can get started, and then you can raise money. You can have a conversation. But if you're just maybe at an idea stage, you think that, oh, you need $2 million, $5 million, I think you should take the back seat, refine your business. And I try to be really, brutal, really honest. Take the back seat, refine your model, test the market, know what your consumers or your customers really want before you reach out to investors. And then there was a second question. So the question was two parts. You talked about what type of company, and then the second was
what is there anybody that is exempted? I think you've already answered that question.
Oh yeah, no. So no one is. All you need to raise money is be financially viable or commercially viable. And I mean, you don't have to be making $1 million. You can even be making $1,000, but ensure that you're at the point where you have tested your markets. You are not just, still daydreaming about this very great idea, or, assuming that this will change the face of the world.
Yeah, okay. Do you know what? I also want to ask something, so we're talking about companies, right? I remember growing up that all these companies or all these businesses, because they say women, especially African women, they're largely entrepreneurial in the way they live. They have so many business hustles up and down. And my mind keeps going to the people who had like all those shops and boutiques in the neighborhood. Are those kind of businesses also eligible if they put
Very
the
interesting.
structure in?
Mhm. Yes.
You understand what I'm trying to say?
Yeah, so that's a really interesting question again. I'm going to use that a lot because I'm sure you give me a lot, you throw a lot of interesting questions. So those business, very honestly, they're eligible, but the truth is equity raising is not like your plain vanilla debt. And plain vanilla debt is when you say, give me £1 million or 500,000, or £10,000, right? Or 10,000 naira, and I will give you back 10% in 1 month plus so 110% back,
So
which
that's
is
your
your principal and interest.
loan.
That is debt. That
That's
is
your
your plain vanilla
business
debt.
loan.
Yes, that's a loan. That's your debt,
Okay.
right? So that is very, very. So those guys, yeah, I mean, they are no. It's not more. It's very simple, and that's why it's called plain vanilla debt technically. Very straightforward. Give me 10,000 naira. I will give you back 11,000 by after 30 days. Those guys understand that transaction is very simple. But when you start talking equity, it's not like they cannot raise money. But the truth is, equity is not just a very straightforward or simple transaction, sorry. It is even more like we call it technically, equity raising is both um, sweat, right? So a lot of soft things are included when you're raising money. So for example, the woman who owns the boutique, she doesn't understand that, if I'm going to be investing equity, you have no obligation to pay me anything after month month one or month two. You might pay dividends if you're profitable. You can see it starts getting tricky because that largely depends on you and how efficient your business is. So if, for example, you are making 100,000 naira, but your cost is 95, bottom line comes down to 5, and maybe the kind of business needs you to plow back profits. You are plowing back maybe 3,000 and you have just 2,000 naira left. If you repeat this, so you rinse and repeat over 5 years, you can see I'm not going to get anything in dividend, right? So it's very tricky. That kind of business is it's not structured enough to accommodate equity funding from external parties. If it's my daughter now or a family and friend who is fine with that informal conversation, they can put their money in and then we have a chat about it. But with equity, you're talking, it's a process. You're talking at the point when you've negotiated and both of you, a willing buyer has agreed with the willing seller, you've fixed the price, you're all going to sign a shareholders agreement that has like multiple covenants, things as tricky as if maybe you do not meet X, the board has the right to take you off as CEO. So those are very, very technical and very sensitive things that these type of unstructured businesses are not ready to handle. Or are not, yeah, they don't have capacity to handle. Yeah.
Okay, so I know basically, yes, for the most part, I think I understand a lot about it. But one thing is that because we're a community for entrepreneurs, there are different people with different businesses here. So I think for the purpose of this session, we're not going to differentiate between whether you're raising vanilla funding as per debt or you're doing equity, so that we can just understand that whichever one you're doing, there's certain things you need to put in place, which I think is right?
Correct.
So what's the first thing, as somebody who is either just starting out or already has a business that they're already envisaging that this business is going to grow really big, but I may not have the funds to scale it to the points that I think I want to go? What's the first thing they need to do?
Yeah. So like I said, you need to find your spot. You need to, because again, I'm not just a business and finance professional. I'm also an entrepreneur. I have businesses that has launched into the market. I've tested my model. Some of them successfully, some of them had to make the tough decision to shut down because it was bleeding, right? So I totally understand the rush and the optimism that every entrepreneur fails, right? But I would say that the first thing is to be like, I can't say it enough. You have to be commercially viable, because if you're raising serious money, you can lose your business, right? You can lose your business, you can lose your integrity.